believe this is live now. I did want to double check that. Why isn't that working? It's odd. I do have volume, and I just started to hear my upstairs neighbor's puppy start to get active, so there may be whimpering random sounds throughout the video. I'll have my editor deal with that, maybe. Diving into this, having this be the most concise. I wish I could just see. I don't know why it's not showing me that. This is After the Bell, the recap of QQQ Before the Bell, episode 7. This was published before the market opened for Tuesday, March 31st, 2026. And the initial bias was still bearish. Market had a massive upside move instead. We'll get into that. The pivot was 562. So above 562, it invalidated this bearish bias based on the scenarios discussed after the key levels, the scenarios that it is bullish on a reclaim above 562. And the pre-market had already tested 564.80. And if we open above 562 and hold through the key midpoint of the halfway time in the trading day from 9:30 to 4 p.m., which is 12:45, the midpoint, there then opens a pathway towards 568.5, but more to the 574, 575 upside target, and the bulls exceeded that. We'll get into the details. The bull structure survived the midday and was able to close into the highs. The bear and consolidation scenarios, as stated below, are irrelevant because the structure formed higher lows versus low of day within the first hour and a half, 2 hours. That price action structure has sentiment. That sentiment is bullish. The buyers are in control. The report provided before the market opened is discussing that in the volatility section, we have a 10-day sigma deviation on the NASDAQ closing with a average price of $14.49. So on the average 10-day sigma deviation, we're almost $14.50, $15. When we're getting these larger volatility days, we're achieving that $14 range. The implied base move is $5 to $6 with an expansion toward $10 to $12 on directional conviction. And the directional conviction had expansion that was able to pin the close essentially. In summary, above 562, we have bull reclaims with extensions to 574, 575. If we're below 555 and 60 cents, we have bear continuation with downside extensions to 547, 548. That seemed really extreme. And obviously, we had already achieved 10% from the highs to the lows year to date. And from that point, the buyers have essentially squeezed the sellers. News came out and the exact tweet. Oh, you got to pay the subscription to read the tweet. I should have found it beforehand. Anyway, essentially, at some point in the middle of the day, I think just before 12:30, 12:35, we'll see it in the price action. The news is a catalyst for the direction price is already moving. Price was already trending to the upside. You have news that a ongoing conflict may find resolution. There's many variables, but some possibility of bullishness in a market that is in extreme fear results in a short squeeze. The last sellers are being squeezed out of their positions. It's the exact thing I talked about in yesterday's stream, talking about where the only real way the buyers overcome this massive sell move is that you get a short squeeze where you get a massive move to the upside, and then that structure on the daily continues to form where you're holding higher lows. And really what we saw today was just a break of all resistance. None of this resistance matters. The only part that matters is the upside extensions, but we broke above and turned them into support. So I think the report without images, it feels more condensed, and without any excess bells and whistles, I think this is as concise as it can be. Let me know in the comment section down below if you think there needs to be more than a session summary, volatility section, the scenarios. I think those three are pillars that are essential. I could cut the key levels if we really didn't need it. Maybe a daily image would be a good enough recap. I'm thinking of a few things, but it's not a priority. I think the report can be a minute read, a 2-minute read, without the key levels involved, and instead just the scenarios, volatility, summary, and the recap where we stand. I think that makes it like a 3-minute read, like a few minutes, under 5 minutes, preferably under 3 minutes. But let me know in the comment section down below. I think the scenarios continue to provide the key levels that price has to trade relative to for the NASDAQ in order for there to be the breaks higher. So on the daily here, we essentially were year to date, we are currently down based on the close, 6.92% as of Tuesday, March 31st. At the extreme, we were down 10%. Down 10% at the low of the prior day, Monday, relative to the yearly open, we were down 10%. We closed just above 10%, and then you can just see the NASDAQ made a gain of 3.3%, $18.90, because overnight from the close, you have a gap up of 1%, and that gap has the continuation to close up 3.39%, $18.90. $18.90 is a rather significant move. You're filling this overnight gap on the NASDAQ, and you're having the continuation, almost, I would say, retracing, failing to close above, but you're testing that prior candle from the open to the close, that 50%, the midpoint of this is Tuesday, so this is Monday's trading day, this is Friday's, this right here is Thursday of last week. You tested the midpoint, you closed just below. Currently price is 578.60 cents, so it's currently above that midpoint. I would argue that a scenario in which the buyers continue to squeeze the sellers would result in the gap fill here as well. And that gap fill could hurry. If you close that immediately, you're essentially up 1.84%. That doesn't seem impossible after you've already made a 3.3% gain, and you see the 10-day sigma deviation is greater than what requires. So there is gaps to fill here to the upside. If the buyers have the real gap fill all the way up here, you're talking about continuation of 5.25%, $30 on the NASDAQ. That would have to overcome that trend line of resistance, which was drawn previously from the close corners to the, I'm trying to get the corners. I don't think it's perfect, actually. The technical analysis is always subjective. It's never objectively correct. It has a subjective nature based on your exact placement of it, but it's still based on the same price action, and that price action is objective reality, the battle of the buyers and the sellers. Where is fair market price? And today was a classic overnight. The buyers were squeezing the sellers. We opened and there was simply just continuation. Focus on the prior day fib. So again, the 10-minute chart here, gotta move my big head. Damn. Fat. Anyway, focus, professional. Essentially, you're seeing that gap right there. It's always inverse. It's harder than I remember. There. How do people do this? They know which... It's inverse, man. My brain can't handle this. You have this gap up overnight. This is the pre-market. I have the pre-market turned off here on Thinkorswim, so you don't have to watch from the close 4 p.m. The market then opens 6 p.m. From 6 p.m. all the way through until 9:29, 9:30 is when the market opens. So all that time is removed, and you just see the immediate gap up. And the structure is simply holding higher highs relative to the opening high. You're making higher highs, you're holding higher lows, you're back testing. And if you really want to get granular, I think the 3-minute is small as you should go, but we'll focus on the 5. And we're going to look at the daily chart instead, the intraday, I should say. And the main thing is that if you start with the first, I'm going to keep this candlestick here so that it just keeps everything in proportion. Otherwise, you zoom in a little too much. So the main thing I want to acknowledge is within the first hour, the first 2 hours of the trading day, taking that range, the retracement tool here, Fibonacci retracement, from the left to the right, from the low, this is your high of day, then you pull back, and then you make this new high of day, so you drop it here. How is the price action structure afterwards respecting each of these Fibonacci levels? If we just take it a few candles at a time, you can see you back test the low, there's a test and a hold. It is a loop and tag. The sellers, if the sellers were in control, they would attempt to fill this gap. The sellers failed to fill this gap, therefore the buyers are in control. If 1 + 1, then 2. If 2 - 1, then 1. It's binary. Buyers and sellers and exhaustion. The exhaustion is validated at the loop and tag. You're holding and breaking higher. What does structure form through the day? You're holding loop and tag higher low versus the low versus low a day. Higher lows lead to higher highs, especially when there's news. Just before the midpoint, 1245, you're getting the break to the upside at the midpoint in the time of day, key time of day, prices clearing this 5-minute candlestick. There's no question it closes massively above the prior high of day. The following candlesticks have nothing but movement higher. There's wicking. The sellers are stepping into the market. There's profit taking. That's natural. In an uptrend, there will be profit takers. However, that is not the signal that sellers are gaining control. There are sellers in the market. Those sellers do not control the direction into the close at this point in time, because all price continues to do is consolidate and consolidate. You're holding higher low structure still, higher low structure, and you're pinning it into the second deviation above the original intraday range. From here to here, how many bars is that? That is, it's an hour, it's exactly 13 bars. The initial hour range provides you the Fibonacci retracement, which has the extensions, the first -61.8, the second -161.8. These Fibonacci extensions are magnets for price action, because price action is based on the algorithms which are coded to follow prior price action structure and current price action structure, and that structure often gravitates to these Fibonacci levels. We're pinning just below the second $577.27. We closed $577.14, 13 cents below that level. It is an extra $2. If you look at the high of day here, the high is $578.64. It's $3.68 more than my upside target. We had that extended expansion. I was viewing the volatility profile, thinking that range would have a maximum, not a maximum. I don't think I said maximum in this report. I'm just saying that the sigma deviation is 14 and a half, basically upward expansion toward 10 to 12 on directional conviction, yeah. How price trades relative, so you already cleared 562. We left 562 in the mirror a long time ago, in the rear view mirror. Not your front. You get what I'm saying, right? Chat. Dubs in chat, right? Anyway. The session summary, based on the hold of 562, should be purely bullish sentiment. It should not be, oh, we're in a sell move, you have to be bearish. At some point, the sellers are reaching exhaustion. They can no longer force lower highs to hold. I mean, that's one of the first things, is that you're no longer holding lower highs versus the prior 2 days high of day. Lower highs versus a high a day leads to lower lows. If you can hold higher lows versus low a day like we did today, then you have continuation higher. This is price action interpretation. It is not rocket science. It is not calculus. It is not physics. It is not, I think it's kind of logic and simple if-then statements. Timing. 100% of the time, a successful trade is the right price action interpretation and the right technical analysis. Let me button up. Let me get a little more conservative. Keep it proper. Prim and proper. I've already done the whole stream. Who gives a shit? Fuck the prim and proper. One way to view the market is to essentially look at the higher time frame and pretend that all you see is the first if we just look at that opening, the close to the open gap there, and just see you're back testing and holding that gap, and you're never trying to fill it to the downside. Sellers were never in control. Pure continuation. The 30-minute candlesticks, the half-hour time frame close is a key time of day. Every time the half-hour candlestick closes, it is a key time of day. There is officially new structure that has formed. That structure provides sentiment, and the next half-hour candlestick is opening, and how the structure continues to form will provide further sentiment and insight into the direction of price into the close. Now, if we didn't have these gaps to fill here, we had left that unfilled here. Maybe without the gaps to fill, we would see price action have a stronger sell into the close. Maybe, hypothetically speaking. The reason why we didn't sell, there was a move to the downside I mean, we really accelerated. We were consolidating, we were stuck sideways, and then from the close here to the lows, we started to accelerate. Within 10 trading days, you're down almost 8%. That's a little extreme. No? Is it not? You're declining. You're declining 8% in 10 trading days. If I look at the Dow, how many points did the Dow decline, Mr. President? If the Dow declines more than 1,000 points in a single trading day, then what? What was the quote? Whatever. The extreme, I wouldn't call it even an extreme. It was a justified sell-off, given an unprovoked war. They've been warning about Iran since before I was born. We just had to go there. They've been 2 weeks away from developing nuclear warheads since 1996. We had to do something now that it's the big 2026. Whatever, man. Whatever. You go bomb a foreign country that is massively larger than the prior foreign countries you did the same treatment, the same liberation, whatever Orwellian new speech you want to throw at this. Whichever new nation you're attempting to liberate by bombing the crap out of, which then retaliates with the Strait of Hormuz being shut down, collapsing oil supplies. I don't know, maybe cause and effect, maybe, Mr. President. Maybe there should be some forethought. Maybe there should be some planning. Maybe get positions into place to prevent the shutdown before the military. I don't know. But you go bomb the crap out of them. They have strategic geographical location. You don't have to be a geopolitical expert to know that. Everyone and their mother is a geopolitical expert because it's the only thing in the news. You bomb the crap out of them, they start firing missiles. Like, you can't even count how many missiles that they've gone through. It's unquantifiable at this point. I'm sure there's a nerd somewhere working their ass off to calculate it, but God bless you. They've been firing them like from the decentralization of Iran's military allowed for it to continue this barrage despite its heads of state being assassinated. What happens when you destroy the older generations that are trying to maintain the less radical, I shouldn't say the less radical. They're trying to maintain the youth, which tend to be more extreme or radical or more prone to revolution, but not a revolution that certain foreign entities would like it to be. It's the kind of revolution that is bloody when it did not need to be this way. Just because a clean break report included Iran in it doesn't mean you bomb foreign nations into subjugation. I'm on my podium here. I said this would be short and condensed, but it's the loss of innocent human life and the reality that I don't even know if it's real or not. You don't know what the news is reporting, whether it's true or not. We've been inundated with AI and fake information and misinformation, disinformation. So when you hear that there is an Iranian school that is blown up, an all-girls school, you scratch your head and wonder how and why, and is this real? And those are real world consequences that no one on a financial YouTube talks about because it doesn't work well with algorithms and no one wants to hear this. No one wants the doom and gloom. They want, where do I invest? Invest in the military companies. Invest in Palantir. If you're so inclined. The puppy upstairs is not a fan of Palantir apparently because I hear her banging, or him, her. I think it's a her. Anyway, year to date, this thing is, you know, I don't own any of it. I'm not a proponent of it. But if you want to be, you know, pro the military industrial complex, you want to be pro the deep state, you want to be pro a Peter Thiel project, here you go. This stock will rally because it will profit from the government contracts where it's building a database, surveilling Americans, here's American John Doe, and here is his birth certificate, and here is his medical records, and here is his income statements, and here is his social media feed, and here is his credit report, and here is his local friends and all of their informations and just webs of connection of all this information and maybe where they spend their money, what credit cards or debit cards. This company is building the literal Palantir from the Lord of the Rings, and they'll just print money. The US dollar is debased and debased. It loses value. Things denominated in dollars inflate in value because the dollar is less valuable. Because the dollar is less valuable, it takes more less valuable dollars, cheaper dollars. They buy less goods. It buys smaller basket of goods with the same amount of dollars. $100 at the grocery store today versus $100 at the grocery store 10, 20, 50 years ago. Look at the price of a can of soup since 1970 to the day. Present day, March 31st, 2026. Goes from less than 30 cents to over $2. Why is that? Purchasing power, devaluing of the purchasing value of the dollar because it is a fiat-based, debt-based monetary system. So things that are denominated, the risk on assets, when you ask who encouraged Nixon to take us off the gold standard, who did it? The godfather to BlackRock, the mentor to Larry Fink. Ask the questions, do the Google searches. There's a reason they planned this, because you take the dollar off the gold standard, you make it fiat, you print it, risk on assets inflate in price. Those who own the risk on assets are infinitely wealthy over the span of 1 to 2 generations. And now it's all about maintaining. And how do they maintain? Through surveillance. You can't surveil and control the United States the way you could a medieval kingdom. It's massively larger, immensely larger population, so you monitor through surveillance states. Enter Palantir, your new favorite lifestyle brand. Where's the Palantir hat? Where's my Palantir hat? I'm gonna buy one. That's not what it is, that's what it is. You wear this, and it's a sign to the other demon worshipers that you worship the same seeing eye of demon worship, and that you're in the big club. and then they give you $1 million. Allegedly. None of this is true. This is all satirical, folks. Palantir, don't sue me. I'm not worth it. I have 81 subscribers. Palantir is a good investment if you think the surveillance state is going to happen and someone's going to profit from it. Someone who made money in the gold rush, folks? Who made the most money? The people selling the shovels and the pickaxes. Who's selling the modern day shovel and pickaxe? It's Palantir and it's Nvidia. So there you go. Look at them year to date. Consider your risk to reward if you think your risk aversion deems it so. I am not a financial advisor. None of this is financial advice. The market is not guaranteed to rally just because we had one moment of positive news, one green trading day where Nvidia rallied 5.5%. Okay. So the scenarios that were provided, the only thing that mattered was that once 562 was cleared, the NASDAQ was primed to target 568, 569. If that clears, you're seeing 574, 575. Market said, hold my beer. I'm going to continue to climb. On its David Goggins type shit, it said, hold my... Who's going to carry the boats? The buyers asked, and the buyers asked and answered. The buyers said, who will carry the boats? I will carry the boats. I will carry the boats. I am carrying this boat right now. The buyers. You're talking about the rising tide? A rising tide lifts all boats. That rising tide is the buyers. The buyers said, I'm on my David Goggins type shit. What else do you say when the market ends 3% green in the face of World War III? Genuinely, low-genuinely, for my Gen Zs, my alphas, where we at, chat? Unbelievable. The market does its loop tag, loop-de-loop, a loop and tag, a looped and tag, and then it scoots. Loop-de-loop and scoot. Scoop the poop. You got a poop scooper. When you have a dog, you poop, scoop, throw it in the bag, you're done. Send that to your neighbor if your neighbor doesn't pick up after their dogs. I'm joking. My neighbors are great. They're your favorite upstairs neighbors. They own clogs. And they enjoy tap dancing as well. Very cultural. Anyway, the NASDAQ had a lovely rally. Will that rally sustain itself? That's the main question I have when I view this chart. This gap, I would imagine, is a gap that could be left unfilled. There's other gaps that are unfilled on the daily chart. We'll start with the year to date, and then we'll take a larger step back. So back here, you have these gaps where there's a gap here and one here that have been left unfilled. There's also this one and that one. And that one. I think that's all them. That should be all them. So ever since April of 2025, we've gotten gap heavy. Gap fever. Is the gap even a company anymore? I don't even, whatever. There are unfilled gaps in the larger term uptrend. So gaps do not always have to fill. If you have a YouTuber that you watch and they say, oh, there's an unfilled gap to the downside because we gapped up overnight, therefore you should be bearish, they're wrong. not all gaps fill. We leave unfilled gaps. And having a permanent bias is how a trader gets burned. A trader that was unable to shift bullish when the market fathead. The trader who is unable to shift to a bullish bias despite the break of a 1% gap up, you're above the midpoint of the prior intraday, which is that. Why is that wrong? Damn it. There's a ton. Damn it. That's wrong. Shit. Well, I made a mistake. Oopsie. I did an oopsie, chat. I fucked it. And that's not how you get subscribers. No, it was supposed to be that it's the midpoint. Did I use the wrong levels? I have to lock in, chat. I'm sorry. I guess it's the midpoint of the... What? But that's... How do I make such a terrible mistake? How is the pivot wrong? That's supposed to be the most important. Chat, I'm sorry. The midpoint was 561.80 cents, 83 cents. And again, I'm in the way. So the midpoint was actually over here, 561.80 cents, not 562 and 5 cents. I'm not sure why I had that error in the report. That was just a careless error, my mistake. And that midpoint, being above that midpoint, being above the pivot is the main shift from having a previous bearish bias to a presently bullish bias. That was the main thing I really wanted to cover with the NASDAQ. I totally got derailed on those different side tangents. I guess the other things to cover real quick are just Bitcoin, which hasn't really done much of anything besides consolidate. It's in a bear market. Bitcoin bear market blues. Very sad. Unfilled gaps on Bitcoin, whether those will be filled or not, you let me know in the comment section down below what you think will happen to everyone's favorite cryptocurrency, the big B, Bitcoin, currently below $68,000 per Bitcoin. Below 71, 70,000, it's bear market territory. I don't shift out of a bearish bias in the short term until Bitcoin is holding consolidation above the area here of 74, 75, 76,000. You need consolidation above here then to test 79,000, fill this unfilled gap and have the continuation higher. That's Bitcoin will not do well in interest rate rising environments, I believe. Let me know in the comment section if you disagree. Here's the 10-year yield. We're seeing yields come down off of testing 4.48%. Seeing us test 4.48%, but not actually hold above 4.5% is ideal, honestly. How many times am I gonna have to move my head back and forth? Unbelievable. Chad, how are we doing? Are we live? I think we're live. Yields coming down are good for risk on assets. Seeing us break back into 4.3%, if we can come lower into the 4.2%, that is more positive for risk on assets. You would see Bitcoin try to break higher, consolidate, break higher. You'd see movements to the upside like we saw today in the NASDAQ. So overall, interest rates coming down are good for risk on assets. Last thing before I end this is the trade-weighted dollar. Seeing a decline as the trade-weighted dollar declines, that is a more bullish. It is a bullish correlation, not a causation. It's a bullish correlation. It's not a one-to-one causation. But seeing rates coming down as well as the trade-weighted dollar coming down, this is some macro levers that coincide with positive news for risk on assets to break higher as the trade-weighted dollar and yields come lower. So lower yields is always better. It's better for the national debt. It is better for, I think, the average consumer with interest rates lower. There's always trade-offs, but it would be better for the economy if we could keep the inflation rate below 3%, ideally below 2.5%. If you can get to 2%, that's somehow, if that's real, question marks. But seeing the trade-weighted dollar back below 100, more of an indicator that if you can hold below 100 on the trade-weighted dollar, that's one macro lever pushing as a tailwind. It's a tailwind pushing the equity markets forward instead of a headwind preventing it from progressing. Rising trade-weighted dollar Dixie, a headwind. Declining trade-weighted dollar Dixie is a tailwind. Similarly with yields, if yields are coming down, that is a tailwind that is going to accelerate risk on assets climbing higher. If rates are moving higher, that is a signal of a flee from risk on assets, possibly a flee to risk on assets. Would have to break that down in a separate video, but rising yields means prices are falling. Falling yields means prices are rising. So the yield market, much larger than the US stock market, and if we can hold below 4.5%, I will not do my Chicken Little, the sky is falling dance, and instead I'll go grab a bull matador costume and do a few olays and see if we can have a continued bull trend. We'll see. We'll see what the market has in store. It really depends on how the trade-weighted dollar, the 10-year yield are holding. There are different ways to hedge. I think MARA is a fun thing to view when you consider a Bitcoin proxy instead of having a cryptocurrency account and owning Bitcoin outright, investing in a company that mines Bitcoin, it owns Bitcoin on its balance sheet, it is a Bitcoin proxy. And MARA is, it's moving into the data storage sector as well. So it's no longer going to be just a one-to-one correlation it was never a one-to-one correlation for Bitcoin. It was a proxy for Bitcoin, a way to experience asymmetric volatility linked to Bitcoin. And if Bitcoin is making a 2-5% move, MARA typically doing a 6 to 10, 12% move. So just looking at the trading day here from the low to the high, that's a 7.5% trading day for MARA. What did Bitcoin do most recently? Let's see, this is from the low to the high, that is 4%. So a 3% difference. And if you're trying to maximize the potential gain, what has more average percent gain can provide more long-term, safer risk to reward. Obviously, derivatives provide you with different forms of leverage. You can push risk. You can have extreme asymmetric reward. I think MARA is not something, I am not a registered financial advisor, so I'm not telling anyone to buy it. I think it's something that I track and I watch its price. I have been a shareholder in the past. I'm considering investing again if Bitcoin is going to consolidate, if the stock market is going to trend higher. This would be a stock that I think relative to its yearly price is at a slight discount. Relative to its long-term price, it is at a discount. Relative to its long-term price, yes. Can you trade? Can a stock go to zero? Yes. Yes, it can go to zero. What is the probability of that happening? What is the probability of a Peter Thiel, a deep state agent's company in MARA? What's the probability of that going to zero? When you have the deep state, when you have the CIA giving you contracts for one company, are they not going to help you in other ways? Are you not going to find methods in which to move money and to maintain your successful side businesses? So Peter Thiel, the PayPal mafia member in Palantir, MARA, another project of his that I find interesting. You do not need to open a cryptocurrency account. You have leverage or exposure, I should say. It is exposure to Bitcoin because MARA is a Bitcoin proxy. It has Bitcoin on its balance sheet. It mines Bitcoin. MARA expanding into data storage diversifies the risk outside of just Bitcoin risk. MARA as a company has its own risk. Peter Thiel could have corruption. Maybe he was on certain islands. Maybe he wasn't. I don't know anything. I'm not making any claims. There's risk for Bitcoin. There's risk for companies that own it on their balance sheets. There's risk for each individual company based on the share, not just the shareholder, I should say, the board of directors, the key C-suite members. If they are found in legal trouble, if they are found to be in some scandalous predicament, there's unintended consequences that could have negative drawbacks on companies, not just MARA. It could happen to Apple. It could happen to NVIDIA. It could happen to any company. There's financial risk that you need to do your fiduciary due diligence and review before you invest in any companies. I am not providing you a financial advice to invest in anything, so do not take that and try to misconstrue my message. Just wanted to end with the S&P 500. You can see the rally that occurred today directly mirrors the rally you see in the NASDAQ's daily as well. They are highly correlated, sharing components, and when one is moving, the other is moving. Does the dog move the tail, or does the tail move the dog? What is it, folks? You let me know in the comments section down below. the bulls, they came back with a vengeance. And the question on everyone's mind, will they end the week in control? If so, at what price point will we close? Will we close above or below 588? The close here was $587.82. So if you're closing above, I would say testing the gap in general before the weekend would be pretty significant of the buyers to really be signaling that they are willing to step into this market. How much more well-timed news do we need? That is one question. How much more well-timed news does the market need to catalyze it to make the extreme moves we saw, such as today's 3.3% gain, $18.90 on the NASDAQ? Very interesting. Anyone in chat with questions? Anything live? I don't think there is. Nope. That is all good with me, man. If you're interested in this kind of content, remember to like, comment, and subscribe. It helps with the algorithm, folks. On Substack, it is Beta Heuristics, and I am Beta Heuristics on YouTube, Instagram, Substack, Twitter, now X, whatever you want to call it. If you enjoy this kind of content, I appreciate subscriptions. This newsletter is free. It is alpha. If you are a bull based on the report, you made money. It's very simple. If the buyers are holding the pivot point, have a bias that is bullish. Have a bias that is bullish. If the sellers were having control below the midpoint, have a bias that is bearish. It's a pretty simple. Maybe I should just have the report be like 2 sentences. Is that too much? Let me know in the comment section down below if this report is too much or too little. Personally, I think a session summary of what are the key levels for the scenarios, the volatility section here, I think is pretty essential, as well as just having the scenarios broken down. I think we could cut the key levels, maybe cut the where we stand part. I think some introduction is necessary. But you let me know in the comment section down below what you think about this content, if the report should be more concise, more brief. Should I have images? I cut the images to cut the size overall. Let me know in the comment section down below what you think is best for the QQQ before the bell report. My goal is to always provide the different scenarios and have those scenarios provide extensions. Those extensions act as magnets, which price likely gravitates to when traded upon correctly, provide alpha, gains on portfolios, which can be asymmetrical in size inside depending on the expiration. If you're trading options, if you're trading shares, there's less leverage. But overall, alpha is alpha. You want to make gains on your portfolio. That's all that really matters. Gains that exceed the overall market's gains, especially. So the session summary with the different scenarios, the key levels being the extensions based on certain assumptions being made, then those extensions possibly testing, and the volatility section, of course. The 10-day sigma deviation, it may become more of a key indicator for our larger range days that we are then testing the prior 10-day sigma deviation price of $14.49 when we have that elevated risk, such as we saw today where the buyers were squeezing the sellers. In such a case as today, the consolidation and bear scenarios, as said prior, are invalid. There's no reason to really discuss them because there was no rejection at the midpoint and the bulls maintained support throughout. So if you like this kind of content, my name is Chris McVitie. Please like, comment, subscribe. It helps with the algorithm across all the algorithms, whether that's Substack, YouTube, Instagram, or X. I appreciate a follow, a subscribe, a thumbs up, a comment down below. Whether you like the content, hate the content, let me know down below. Until the next recording, stay green, traders.